in order to manage the economy, you can't have a gold standard because the Fed has got to be ready to expand credit at an instant notice. But what you have with a gold standard is that it constrains what the central bankers can do.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. Got a special treat for you now. Bob Hoye, he's got his favorite pick in mining stocks, which are literally, I don't even know if they're the redheaded stepchild anymore. Maybe they're the bald-headed stepchild. Bob, the sector has been beat up. And is this a buying opportunity or a jumping opportunity, like jumping off a billboard?
Yeah. Very good phrase. As you know, I took a degree in geology and actually got summer jobs in the field working for juniors. So I've always been partial to them, and I've had some very good ones over the decades. And, well, for example, 1995, I got a list from a gold fund manager. I said, "Hey, John, give me a list of exploration stocks." And he got 5. And just juniors. And one of them in 1996 turned out to be Arequipa, a major discovery in Peru, and the stock went to $30, which was wonderful. So then, with looking at how devastated many of the golds are, and particularly the juniors, they really are washed right out. And you've got the Toronto Venture Stock Index, which is all the juniors, and it really is down. And technically, it's exhausted, beat up, whatever, and it looks like it's forming a bottom. So what we did was take a list of maybe it's about 15 a small cap gold stocks, no silvers, just straight gold stocks, and they range from small producers, small pre-production, just straight exploration. And in it is one that has a property that, geologically speaking, could be a big winner. And we all know that in South Africa, Witwatersrand gold system, the number usually is that it's produced 40% of all of the gold ever mined in history. I don't know, millions and millions of ounces at 15 grams a ton. So there's certain striking symbols about that geology. And a company I'm involved in and have been has a Witwatersrand property in Colombia. Actually, it's on the border of Colombia and Brazil. And locals on both sides of the border want to see this thing go ahead. And we've had it for a number of years. And but what has happened with this company recently? Well, actually, a year ago, one of the big Japanese trading firms came in and ran a survey for banded iron formation. And banded iron formation can occur near or part of a Witwatersrand system. We're not interested in that, but a major mining company is. So, but to get down to ours, the main reef is about 20 kilometers long, and it shows gold samples all the way along. Is cross-faulting where been remineralized, and there's actually a couple of locals making a living there, banging the gold off the rock and crushing it up and panning it for gold, which we don't mind. But this is the gold is sort of disseminated in various forms along this 30-kilometer reef. 20-kilometer reef. And of course, that would indicate that this should be a project for a huge mining company. Because the recent recommendation from the consulting geologists in South Africa was a big drill set up on top of a certain place and drilling down to intercept the structure. But we have a modest drill on the property and water pumps and stuff like that. So a few months ago, we were getting the equipment tuned up, the water pumps going and the drill going. So the driller just drilled a hole on the edge of this reef. And in less than 50 meters down, he came up with the right stuff. And this is, in the Whitwater system, the best grades are carried in what's called a conglomerate zone.
Mm-hmm.
And so this drill hole accidentally intercepted a conglomerate strata. And we've got the gold samples, the core samples and the gold, and also the particles of gold are of a certain nature. So we've got both. We've got the conglomerate strata, and it's got the right kind of particles of gold in it. But it's less than 50 meters down, so we got the one hole in it. But then once we're underway, and then that sets up for easy drilling along strike. Whereas the other would be drilling for ordinary gold
Sure.
at some depth with a big drill. So this is absolutely incredible. It's one of those happy things that happen in mining exploration from time to time. So we like the list of juniors, and people can request it, and we're glad to send it out. And we emphasize that one of them, CST Cosigo Resources, has a very large prospect in it. So,
That's amazing.
yeah.
I know we talked about the company, and it was kind of not doing much, and then all of a sudden, right, before your very eyes.
Yeah, no, it did, along with a lot of the juniors. And you take a look at the PSE Venture, which is a good proxy for junior gold. But it's interesting, Kerry. You go back to the GDXJ. Well, the XJ stood for Exploration Juniors. And now we've got stocks like Kinross in there. So the GDXJ is no longer an index of junior gold. They all grew up.
Yes. No.
So anyway, so then that leaves us with the venture. Now, my colleague Ross has done his usual technical stuff on it, and the TSE Venture, which is a proxy for the juniors, is totally beat up, and what we call a downside capitulation. And it also has a sequential buy in it now. So it looked like it's basing, after suffering, a dismal hit. And so you got everything here. You've got the sector completely devastated. Now, as you know, on gold, I do gold's real price, which is deflated by the CPI, or better, the rate of inflation. And better than that is gold deflated by the CRB, the commodity index. Now, the reason why we do this is that the commodity index is a proxy for mining costs. So if the CRB is falling relative to gold, which it is now on that trend, this could at some point begin to enhance profit margins for gold miners, and also secondarily valuation of mineral prospects in the field. And then also even make it clear, we did gold divided by crude oil. Now, in any kind of mining, energy costs are about 60%
Huge.
of overall cost. And if you got energy costs, as represented by crude oil, falling relative to gold, which it is doing, that then is enhancing operating margins. So I'm not really bullish on gold in U.S. dollar terms.
Right.
Because in a post-bubble contraction, senior currency, which is the U.S. dollar, becomes chronically firm. Now, ironically, gold's real price becomes chronically firm. And as I've said, the best way of keeping track of that is relative to the CRB or relative to crude oil. And these now are in uptrend, a well-established uptrend that will be the foundation for the next major move up in the gold sector. So that would be all gold stocks. And but as I say, the forlorn side of the equation is the juniors. And here's another one: is seasonally on the Vancouver Stock Exchange, you can have a low going into Christmas because for part of December you've got tax loss selling, and then at Christmas time the promoters are all doing something else, and then traditionally it turns around and starts to act a little better in the new year. So everything's set up for people to be buying junior golds, Kerry.
All right, I like it.
And once it gets going, once it gets going, it feeds on itself. And so now, how does this compare to other sectors? Well, we're in a bear market for, like, say, the S&P, although it's been acting very well lately. But generally, we think that the top in January 2022 was the end of a great bubble. And what happens is in great financial bubbles like recently and then 1929 or 1873, they're methodical. They have key components. So the four items that we keep track of to keep, if you were on path to a contraction, one of them is that base metals, copper's real price, which was up with the bubble, then heads down, which is the case. Gold goes the other way. Its real price goes down with the bubble and then goes up after the bubble, and this has been working out. Then another is that the senior currency becomes firm.
Mm-hmm.
And that generally is working out. But and the other one is that that real long interest rates go up.
Right. Sorry about that.
And it's a killer. Now, so far, the increase in real rates for the long treasury, 10-year,
mm-hmm.
it's gone from sort of minus 0.40% to now about 2, so it's 2.10. So it's up about 2.5 percentage points, and people are complaining about rising rates. Well, in previous post-bubble crashes, the real long interest rate has gone up by sort of in the league of 10 to 12 percentage points. And this thing is up now 2.5 percentage points, and there's pain. Can you imagine what it's like if it goes up that far? So you get this contrast whereby real long rates go up, but also the real price of gold goes up. So when the S&P is not getting killed, the gold stocks will be rising. But also, Kerry, beyond this, is that let's say the GDXJ could probably outperform the S&P. Now, if you got some hotshot fund manager, equity guy, and he's looking at a couple of quarters whereby the GDXJ is outperforming the S&P. He may not normally buy gold stocks, but because of that outperformance, he's going to have to buy gold to get in the hot play. So this is where I see wonderful stuff ahead for all, the whole range of gold stocks. Now, this can go on for a number of years. Now, we're not talking about the next 6 months. We're talking a number of years where the gold stock would be outperforming, not just going up, but outperforming the S&P. Going to love it.
Yeah, really. Wow. Amazing. Amazing. You mean the promised land's finally going to be here, huh?
Yeah, but look at it happened in following 1929. Then the previous bubble was 1873, and that was the same thing. You went into a multi-year. Well, actually, in England was the senior economy then, and by 1880, economists in England began to call the contraction the Great Depression. It ended in 1895, but gold generally went up through the period. And then the previous one was 1825, bubble, and then a long contraction, and where gold's real price went up. And it goes all the way back to the South Sea bubble in 1720. So all of these key 4 points on monitoring the transition from great bubble to contraction, it happened 5 times before. So, and all I can say now, although you had the monstrous intrusion of COVID lockdown, and then now I think that the strength in the U.S. economy through the third quarter was due to people trying to get back to ordinary after being locked down. But the key thing is that the 4 features of the transition from boom to bust are tracking well. And also, here's one that happens on every business cycle. And I've got the charts on the yield curve back to 1857. And when in a boom, any kind of a boom, the short rates will eventually zoom up and get higher than long rates, and that's called an inverted yield curve. So the curve inverted in March, and it's inevitable on our numbers. Every yield curve inversion has been followed by a recession, without exception. Now, there's one more aspect to this, is that if the inversion is dynamic, or let's put it this way, the more dynamic the inversion, the more severe the recession. And the numbers going into the inversion in March were fairly dynamic. So 2 things. Recession is inevitable. Second, it will likely be severe. And there's nothing anybody can do about it.
Yeah, they can print all the money in China, and what does it accomplish, right?
Yeah. Now, here's one from an editorial in Barron's, the high-end financial publication, in July of 1932, which was actually the bottom of the first major hit in the post-1929 contraction. And they editorialized that every anti-deflationary measure taken by the Fed is not to be working. And they also mentioned, that's approximating the quote. And the article also mentioned that the anti-deflationary measure was to buy bonds out of the market. Mm-hmm. So I can outline that where most standard economists lay the blame for the 1929 crash and depression on the Fed for being too tight, I can show that the Fed was easy all the way down, and that little editorial in Barron's where they say if they were buying bonds out of the market to stop the contraction, and it didn't work. That says it all, doesn't it, Kerry?
Yeah, it certainly does. But if at first you succeed, keep trying, because even if it doesn't work, you still get brownie points from the public, right?
Oh, well, these guys are getting their pushy salaries and memberships in the right clubs and all that sort of stuff for essentially all the Fed can do is depreciate currency. And then you get into a post-bubble contraction, and they cannot depreciate currency. I mean, Kerry, it's like a pub with no beer, no fun at all.
Yeah.
But
who's going to go there? Who's going to go to a pub with?
Yeah, the Fed will be again completely stymied. Now we want to go back to one more, the 1873 bubble. Now in London, the head editor for The Economist, Walter Bagehot, he published that in a boom, a contraction is sort of a neuralgia. That's the term he used. And he said it can be prevented by the Bank of England providing, injecting credit and currency into the market.
Was he related to John?
Now, at the same time, yeah.
And so it's not crazy.
Yeah. Now, at the same time, in New York, the Herald newspaper had an editorial pointing out that in the U.S., they had a better chance at preventing problems because the U.S. did not have a central bank. In 1873, it was sort of a national banking system, but they did not have a central bank. So then you had the thinkers of the time editorializing that in the U.S., nothing could go wrong because they did not have a central bank. In London, it was nothing could go wrong because they had a central bank. And it was believed then that the Secretary of the Treasury could issue credit and currency at an endless amount because they were not on a gold standard.
Right.
And crash. And that depression in England, which is the place to follow it because it was a senior economy, lasted till 1895.
Mm-hmm.
And through that period, gold's real price went up. Guys in the gold business made money.
Yeah.
Now, I'll give you an example. Homestake was the premier producer going into 1929. The stock went down with the crash, and their earnings went down with the boom. So you could buy it in 1931 for $9 a share. So you go then to the end of 1932. It was March 1933 when Roosevelt started messing around with the gold price. So to the end of 1932, gold was still fixed at $20.67 an ounce. Well, the stock was up 130% from its low, and their earnings were up about 130% from the low. Gold was still fixed at $20.67. What happened is their cost of mining crashed. Equipment became available because base metals were shutting down. Miners were available because base metals were shutting down. So this is how gold works in a post-bubble deflation. And then eventually, at the very happy time, in the mid-1930s, 1935, Homestake stock was up to something like $65. And in those days, gold miners paid out virtually everything by way of dividend. So on your original $9 purchase, you were getting not only that gain to $65, but you were getting $4 a share dividend annually on a $9 purchase.
Pretty good.
Talk about profitability of gold stocks in a post-bubble contraction.
Amazing. So
there's my happy story.
So history's going to repeat itself, huh?
Oh yeah, we're on track for I just say the unusual thing was COVID shut down, and then everybody getting back to business. And I think they're kind of all back to being normal, and then now comes in the downside. And as I say, you've got the warning from the yield curve becoming inverted in March, and there's no way out from that one.
All right, got a question for you. Argentina.
Yeah,
Talking about getting rid of central banks. What's going to happen to Argentina when they shutter their central bank? They going to live happily ever?
Hey, that new leader, I can't Millie or whatever his name is.
Yeah,
he is truly libertarian.
Yeah,
and it is most astonishing.
How do you get elected? How do you get elected when you're a libertarian? I thought, look, I've been a libertarian my whole life, just about, my 20s, and I never thought I could get elected to anything, let alone dog.
No, the guy, it was the times. People have had enough of the old intrusion and went for this guy's story. Now, also, I think to be practical, the whole system, the financial world will resist canceling a central bank. But what they can do, and what this guy likes to do, is just put them on a gold standard.
Or just say, restrict the money supply. But he has to do it in a way that his successors can't undo it. And that might necessitate...
Well, the gold standard does provide discipline.
Yes.
So, the economic side says that in order to manage the economy, you can't have a gold standard because the Fed has got to be ready to expand credit at an instant notice. But what you have with a gold standard is that it constrains what the central bankers can do. They start losing a whole bunch of gold, short rate soar, they don't like that, so then they back off doing stupid and try to maintain their gold reserve.
That's why they got rid of it in the first place, right?
Oh, yeah. In Canada, in order to join some G20 or something like that, they insisted quietly under the table that Canada sell all of its gold, which it did do. It's crazy.
Yep.
Yeah.
Crazy.
But it's interesting that some central banks have been accumulating gold. Now, whether they're doing it because they're fearful of their own inflation or because the real price is going up and intuitively they find it attractive, but at any rate, any of the central banks that are buying gold are actually buying the only reserve that a central bank should have, which is gold.
Yeah. You keep telling me that it's going, and I have to admit I've been skeptical, but Argentina is definitely cause for hope, huh?
Oh, absolutely. For me, it was a fabulous shock because I wasn't following it that closely, and all of a sudden, a pure libertarian wins the most important office in the land. Wow.
Who would have thought? Did you ever think that could be possible?
Now, after the war, Argentina was extremely prosperous because they were shipping all kinds of food, grains, and resources and everything else to Europe. And then along came Perón, and he gave everybody pensions and the pure socialism, and they virtually ruined the country. But you get Argentina back onto sound money, and that country can turn back into a wonderful producer again.
Yeah, it was the fifth most prosperous country at the turn of the 20th century, right?
Yeah, I think so. Yeah, wonderful. It was something. Yeah.
Yeah, and they're still living off of it.
And then once one country goes to gold, it's like an idea in the financial markets. We've got to do it too. And I think it'll happen.
Can you imagine if they become like the Hong Kong or the Chile, like Chile was all these years, if they become that?
Oh, yeah.
That would be, because they've got great resources there. They got great wine.
Yeah.
So
Yeah.
they could do it.
Oh, yeah. Well, can you imagine Canada and the U.S. on gold standards? I can't, because it throttles the ambition of government.
Mm-hmm.
And it provides a benchmark for all of the financial markets. And
everything.
I'd be happy if the Canadian dollar got up to $1.10 relative to the U.S.
Yeah. Hey, everything they don't want to do.
We have been there for a long time.
Yep. God, yeah. Well, that was in 2011, if I remember correctly. You were at like $1.05 U.S.
Yeah, I had bought a couple of old sports cars from the U.S. when the dollar premium was great. So
I know you like to race. Yeah.
Yeah.
All right.
Okay, Kerry.
Hey,
the chat.
Oh, by the way, if you're out there and you want that list of companies, send an email and put in the subject line Hoye list, Hoye list, and we will send it out to you. Sound good, Bob?
Yeah. That's terrific, and we would welcome. We think it's a good bet in here, and people might just will have some exposure.
Absolutely, could not agree with you more. All right, Bob. Hey, if you got a question for Bob,
okay, Kerry.
Yeah, if you got a question for Bob or myself, email KL@kerrylutz.com. We'll get you an answer. Bob, always a pleasure. You be well.
You too, and have a very good Christmas season.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.